Apparently, this internship pays $5,000 a week. Citadel internship pays $5,000 a week and provides free housing in New York City. So let's see. A summer internship at Citadel offers perks that include a salary of up to $5,000 a week, free corporate housing in one of the 10 different world financial centers like New York, and an opening retreat at a Four Seasons in South Florida, according to a report. Billionaire Ken Griffin's hedge fund, which has some $58 billion in assets under management, picked a crop of 300 interns for their summer program this year out of a pool of more than 69,000 applicants, an acceptance rate of just 0.5%, Insider reported. The interns hail from graduate and undergraduate STEM programs at elite colleges and universities such as MIT, UC Berkeley, Harvard, Stanford, Princeton, and the University of Texas at Austin. According to Insider, the 11-week internship kicked off on Monday with a retreat at the Four Seasons in Fort Lauderdale and Palm Beach. Online job postings from Wayback Machine indicated that investment and trading interns based in New York earn between $3,300 and $5,000 a week, which is pretty crazy. So interns who are selected for the program are given free corporate housing in cities that include New York, Chicago, London, Miami, Hong Kong, Paris, and Singapore. Every year, Griffin addresses the interns at the opening retreat in Florida, and the interns are then sent to their base of operations where they are mentored by a manager who guides them in what Insider calls deep dive quantitative trading simulations. At the end of the 11-week program, a majority of interns are offered a full-time position with the company, according to Insider. Now that's actually pretty interesting, right? Because this might be ideal for someone where they could pretty much go 11 weeks without any responsibilities that they might have, right? So like if you are a full-time college student, let's say you just graduated from high school or whatever, you don't really know what you're wanting to do, and you see this, it might be a very good option for you. So we give our interns really exceptional difficult projects, ones that we would otherwise give to employees, Matt Matro, who heads campus recruiting at Citadel, told Insider. The solutions that they design are tested by our teams with the same kind of rigor as the way we test our own employees, and very frequently those projects go into production. All of it is geared towards simulating what life would be like for them if they were to join the firm, Mitra told the news site. Citadel earned a record $16 billion profit in 2022. Blah, blah, blah. Interesting. So the proprietary trading firm Jane Street paid its interns $16,356 per month on average from 2021 to 2022, and Bridgewater Associates paid its interns $13,933 per month, while Acuna Capital shelled out $11,458 per month to its interns during that same period. So basically, the biggest thing to really understand from this is that if you are willing to work non-stop hours for hedge fund companies that don't care about you, you could, in the finance industry, make a lot of money. But you got to ask yourself, are you willing to sell your soul for a lot of money? Because the thing is, to my knowledge, I've heard that a lot of these investment bankers, basically, this is basically what it is, investment bankers, financial consultants, whatever, can clear like 200K, 250K easily per year, right, after tax. But not only that, if they grind it out like 80-hour weeks for like years, they will end up getting to like 500K a year, to like a million a year, to 5 million a year, to 10 million a year, like crazy, crazy numbers. And not only that, like recently I was listening to a podcast of someone who basically interned like this, but then they end up getting into like energy trading, which is pretty volatile stuff, where like you're basically trading like gas, like natural gas, crude oil, that type of stuff. And apparently in that industry, which is similar to this, where it's like the financial industry, but you're basically trading like a commodity almost, you are potentially, like some people apparently have made $1 billion from doing that. So imagine being like $1 billion, not necessarily a day trader, but like a swing trader where like you put in a trade like today and then like a month from now, based off your predictions, you made like $1 billion. Technically, it'd probably be like more like you put 50 million in, that went to like 150, put another 50 million in, that went to like 100. You put another 150, then you like probably do more consistent trades like that. But I don't know, these financial companies, these hedge fund companies, what they're able to do in terms of with their assets is kind of like insane, right? Like this whole financial space is pretty insane, right? It's very different than like just like selling a product. You're basically manipulating markets with the money that you have to make more money. So basically, your product is money, and you are making money from your product, which is money, which is kind of funny, right? Like, can you imagine just making like hundreds of thousands, millions of dollars, billions of dollars from money? Like, that's what you're doing, just money, playing with money, right? Let's see some of these comments. No doubt, for sale to the highest bidder. 300 well-connected individuals. And what does a hedge fund produce? Nothing, not a single product or service you would want to buy. Just nothing but buy low, sell high. Just nothing but more wealth inequality. Stop the massive government deficit spending and the Fed money printing. Keep QT going and reduce that Fed balance sheet from 9 trillion to 4 trillion. And then let's see how many billionaire hedge funds are still around. I mean, there'll still be a lot of billionaire hedge funds, but it's definitely interesting because even though technically these hedge funds don't really produce anything, they do end up typically buying companies that do produce something, right? So even though they're not necessarily doing anything, they are basically getting into ownerships of companies that do produce stuff that does end up helping the economy or providing jobs to people. So there is like a side effect of it where they don't necessarily care about people, but what they do could technically help out people by having jobs. But typically, what these hedge funds do, typically, from what I've read, is that depending on the hedge fund, if they want to just make really quick money, is they will buy a company that is doing okay, right? But then they're like, you know what? We really want to like grow the profit of this company like to a high amount to boost the stock price and then sell it, right? So what they would do is buy these like middle level companies. Like let's say that they will buy like a company for like 5 million or whatever. They would then fire like 90% of the staff, right? Which means they just made the company way more profitable, boosting its stock price and then selling the company, right? Or just liquidating all of its assets, and now they basically just you know, basically burnt the company down to the ground to make like a $10 million profit, a $15 million profit, maybe a $30 million profit, depending on how they're going to be collecting that money. So it's a pretty sad situation as well. So that's what a lot of hedge funds do, just not what they always do. But it's just a very interesting thing, right?